Yo, what is going on, everybody? Welcome back to the Kev Capital Chart of the Day series, where we spend 5 minutes or less pulling back the curtain on some of the most important charts in the crypto market and what it means for you. Today, I'm going to provide another update to the Bitcoin 2-day time frame chart that has the 200-day SMA, the 200-day EMA, and the weekly bull market support band, which consists of the 21-week EMA and the 20-week SMA. The reason why I want to provide another update to this video is because, in my opinion, at the moment, this is very likely the most important chart in the entire market. And the reason why is, and we've been talking about this a lot, Bitcoin has always held its 2-day 200 EMA and SMA throughout an entire bull market. You can make the same argument for the 50-week SMA, but I just prefer these two moving averages instead. They provide a little more flexibility. But like I was saying, Bitcoin has always held these moving averages throughout its bull runs. It's standard stuff, right? It breaks out above them out of the bear market, and it comes back sometimes, and it retests them. This bull market, it retested them 3 times, which has never happened before. That's due to the more laggy type of price action we've had. But every time, right, every time we've come back to test them, we have held them as support. That was the bottom. Even on the altcoins market, it was the bottom. And then you get these big bounces higher. Now something different is happening, right? We lost those key moving averages, right? The bullish momentum broke down. Now we obviously had that counter trend rally, which we were looking for, back up to that 2-day 200 EMA and SMA, or you could just broadly call it the 95.7K to 106.8K range. We rallied up to about 97, 98,000, and now you are seeing a very sharp rejection from that exact range and those moving averages. We've seen this story play out before, right? Look back, and we're not going to go over every time in history. It's happened every time, but let's just, for the sake of the video, stick to this because you already know what I'm going to say, right? You come back in May of 2021. Everyone thought this was the bear market. If you were there, then you remember. We all thought this was the bear market beginning. However, you were retesting the 2-day 200 EMA and SMA. It hadn't been broken yet, let alone we ended up getting another bounce until later in the year. Finally, we lost it in early 2022, and then in March of April of 2022, we had a big 50+% correction. You had a counter trend rally back into those key moving averages. You inevitably failed that retest, and then the more aggressive stages of your bear market began, where you continued to drop, you formed a bear flag, another drop, another bear flag, another drop, so on and so forth. Look where we're currently at now, folks. You're seeing something very similar play out. You broke down from the 2-day 200 EMA and SMA, you've come back up to retest it, and now you're getting a very sharp rejection. Now, what would really confirm the overall bearish thesis, right? Because while those confirmations are working themselves through, you still need to come down and break these lows, okay? You need to come down and break the $84,000 level and then that $79,000 to $80,000 level. If you come down and start breaking those levels and start piercing into the 75 to 70K range, which would technically be the measured move target if you considered this a bear flag, then yeah, you know what I mean? That is a bear market, right? That is a downtrend in Bitcoin. That is a solidified downtrend. That is the initial move down, your counter trend move back to the upside, your rejection followed by your new low. That is a textbook macro downtrend, right? That is the opposite of what you saw here, where you had moves up followed by corrections into the moving averages followed by legs up, right? This is an uptrend, right? No one denies that. And then now we're wondering and still trying to figure out for sure if we're about to begin a macro downtrend, right? You've had your first breakdown, your retest. Are you going to leg lower? Similar to how you break up, come back and retest and leg higher, right? Are we creating a whole new trend, right? And I think this chart just does a really good job at eliminating the bias, eliminating the emotions, and just calling it how you see it, right? And the facts are, at the moment, is Bitcoin is struggling. We knew that was a possibility due to the fact that there's just not much money flow coming into the asset class as a whole, right? There hasn't been for a long time now. The momentum indicators, right? This is the one caveat, right? The momentum indicators on the weekly time frame, the 2-week time frame, they're reset. They've been reset. They want to move higher, right? And I said this in the last video. They're standing on the corner advertising, come buy Bitcoin. We are all reset and ready to go higher. Unfortunately, you're just not getting the market participants. You're not getting the spot inflows required to have those momentum indicators move higher and actually do something. And without money flow, you have nothing, right? We know that without money flows, durable, steady money flow, you have nothing. So, yeah, I mean, it is what it is at the current moment. And, yeah, that's what I'll be watching for here in the coming days is, can Bitcoin hold these lows and try and pull off some type of, like, again, that the one hope would be is that if you're bullish and you think, well, the macro environment is different, it's not 2022, and you would be right in saying that the macro environment is completely different. But in terms of price action, right, what you would be hoping for here is that Bitcoin comes down, swipes liquidity, right, because there is still a lot of long liquidity in these ranges from people who were leveraged long from the lows, comes down here and swipes this liquidity and forms some type of secondary low, right? A more durable secondary low, and then bounces back up higher. I wouldn't count on that at the moment, right? I wouldn't say that's the base case, but that's what you got to be allowed to, that's what you got to look for, right? You don't want to be biased in any direction or the other. You just want to analyze the charts factually, remove emotions, and calculate properly, and obviously make the right decisions around that. So, with that being said, I hope you guys enjoyed the video. If you have any questions, please like and comment and subscribe. If you have some time, check the links in the description below. This is the most important chart in the market at the moment. This is what we'll be watching very closely in the coming days and weeks. And again, if you guys have any questions, please just comment below. With that being said, you all have a nice day. Peace out.